Okay, Andrew, I'm making you a presenter. Looking forward to hearing your voice and seeing your screen. Welcome to F.A.C.E. Hi, Andrew.
Hi, can you hear me?
Yes, yes. How are you, buddy?
Awesome, fine, thanks. How are you? It's been a while since last time we spoke.
Yeah, a couple of years ago. So,
Yeah.
why don't you refresh my memory too, and the communities, and tell us a little bit about how you got started in the business, what your journey was like. You know, everyone has a different road, the road less traveled. How did you get involved in the business?
Yeah, sure. So my journey begins, almost 5 years ago. I just started trading and got interested in the FX market. And then during my studies towards a bachelor's degree, I got, I did a lot of programming and stuff. And eventually I realized that data mining and applications of data mining are extremely vital in trading. So it's supposed to be automated, and it's supposed to be based on some data mining and sophisticated analysis of price data and historical data. And currently I studied with a master's degree in computer science, then again I still deal with this, and for the past 4 years I have been working in the Israeli high-tech industry, from software engineer to a data scientist, and for the past couple of months I actually run a small business with a couple of friends of mine. We are basically trying to deliver people trading ideas in a simple, actionable, and unified way, because the markets are extremely large. There is too much data, too many assets to trade. In the US market we have more than 10,000 assets, and yes, it's very sophisticated, very difficult to find good assets to trade in. So we basically do the heavy lifting. We provide machine learning solutions for the retail investor. We do the data mining and historical price analysis, and eventually find assets that you could invest in.
So are you a believer that concentration of positions is better than being all over the place, being, kind of like being a master of one instead of a jack of all trades? That's a pun.
No, we actually believe in diversification, but not to diversify very wide. But we think that each and every day there are at least 50 assets that you could trade. So if we think about the U.S. market, so if you have around 8,000 to 10,000 assets, 50 possible trades a day, this is what we are looking for. So less is more.
Out of that 50, how many are FX related?
In the FX it's way easier, because we have no more than 50 pairs. And
so you were talking about equities and ETFs.
Yeah.
Okay.
We analyze all of NASDAQ symbols, which means Amex, NICE, NASDAQ, and ETFs, and we also provide trading signals for FX. But we actually think that the opportunity, the higher possible opportunity and lower risks are within equities. So we are now more into equities, and we trade with our own money, not much, around 100,000, but so far it was okay. And we basically, once again, do the machine learning and just provide you some trading ideas.
Okay, so what's on the radar screen? Or would you like to share some ideas that you're considering?
Yeah, so actually I could show you a sample of our product. We basically provide a couple of sections. We deliver those ideas by emails, and usually we divide it to a couple of sections. Long-term investment signals is something that we actually invested in almost fully, and those are assets that we believe were performing tremendously for the past couple of years, and based on our statistical and machine learning analysis, we believe they're gonna go up. So this is how we provide.
Do you have an upside target for Amazon?
No,
it looks
not
like
really.
That's your strongest performer. that you have
Yeah,
there?
so we divide it to strength and slope. Slope is basically how fast the company is growing, and well, strength of the signal. So as long as you see the assets in this list, well, we think that you should be invested in. But once again, those are just our opinion, and we are actually invested in those assets. Then we go with something more riskier, more for the day trader, or like hold it for a week. Basically, here you can see some assets and the underlying probabilities for those assets to go up or down. So basically, those are bullish signals, and the red ones are bearish signals. And,
okay, and this is off your proprietary algo that gives you these readouts.
Yeah,
okay.
Exactly. And
so
then
with your background in college, you naturally drifted towards coding and writing algorithms.
Yeah, of course. I currently studied towards a master's degree. I published 2 papers on the field of applications of data mining in financial markets. One is a new classification algorithm in Bayesian network analysis, and the second one is about this methodology that actually allows us to find assets that we should invest in. And so then we show some
Is there any discretion, or do you do everything that the machine spits out?
No, it's fully automated. It runs daily, and it takes almost a day to run. When markets close and we have the most up-to-date data, like the just close prices and stuff, we just run our algorithms, and tomorrow we have new ideas and we just deliver them.
Okay. All right, because I was wondering, it seemed like you had an education section at the top of your website, and I'm curious how you educate people when it's an automated type of product. What is there to educate besides having people click the link of what you're recommending?
Yeah, but
the education link up there.
Yeah, so we basically try to share some wealth with the retail investor, because the tools are out there, the data is out there. We use professional data from Quandl, but you can get some data from Yahoo Finance or even Quandl, the free database. And you can use Python or you can use Excel, and you can, well, you can do 90% of the things that we actually do by yourself. The problem is that, well, people don't usually have time, or so basically we're trying to provide some knowledge. Like if I gave a talk at local Pi Data about introduction to algorithmic trading, you could check this one out and learn by yourself how to actually use Python, get some historical data, analyze it, apply some machine learning. This is our toolbox. This is all open source. Nothing fancy here, nothing proprietary. We use open source software which is available to all, and we are always we're always eager to help investors and more advanced traders to get into quantitative finance, because this is the way to trade, we think.
Yes, it's nice that you have open source materials. So if someone, this is best for people that have psychology issues with trading, don't you think? It takes all the emotion out of it.
Of course,
okay.
Definitely.
And are there ways to set a risk parameter on all your signals so that you have what's important to me is what's your worst drawdown?
Yeah, so historically we had no more than 10% drawdown on single asset, and once combined we had no more than 5%. And about the risk analysis, we actually, this stuff that I wanted to share with you, how we actually assess risks. So suppose we have some trading ideas, right? So you're a trader, you're using some proprietary trading ideas, or you are using our product, and suppose you have some assets that you are willing to trade. So we actually do a couple of investigations to try to find assets with bad reputations. This is what we call it. So we start with options chain. We believe that assets that have a good options chain, well, they are assets that you should trade. For instance, Amazon, you see that, well, it's very liquid, right? There is nothing to explain here. You have a lot of strikes above, below, a lot of periods. This is cool stuff. So we begin by just
volume,
analyzing.
You look for volume on the strikes as well as open interest?
Yeah.
Okay.
Mainly strike prices to see if, you know, it's not very tight.
Do you get any hints? Do you get any hints on direction by option activity, like a lot of paper coming into one strike, unusual amount jump in volume on a particular option? Tell you anything?
No. Just the bids and asks, just to see that the order book is not dry. This is our main idea here. I'm not. Some of our customers use options to actually enter, so it's very important to them. Others just use stocks, cash, etc. But for us, it's important to see that the order book is not dry. So we begin by just analyzing to see if we have some strike prices within the current traded price, within some, you know, like logical price. Then we continue with model portfolio theory and analysis. So the mean variance optimization and the efficient frontier by Harry Markowitz is, well, we are retail traders. We do not have actually a lot of funds like the big institutions, so it's not very relevant to us. But on the other hand, we can see that, well, sometimes it's very easy to just get an understanding about your portfolio. So suppose I'm willing to trade those assets, and this is not very important what are the assets, but I can see that the mean variance optimization, the combinations of multiple portfolios is positive, right? So any combination of those assets is good. On the other hand, and well, those are just bearish signals, so we actually are looking for them to go down. So you can see that the combination is going down.
So the algorithm plots these dots, and the more concentrated, what tells you what's bullish is because it's going from left to right upwards, and what tells you that it's bearish?
Exactly.
Okay.
Exactly. So
all right.
Those are just combinations of portfolio, and portfolio here could be 100 stocks of asset A and 100 of asset B. But then it could be combined in a different way. Say 90 stocks of asset A and then 110 of asset B. So all of those combinations eventually are historically we're performing like this. So this is the mean performance, and then the standard deviation, which is risk. And if this stuff goes up, so we know we have a good indication. And then if you add actually the efficient frontier, which is just a tangent line for the optimal portfolio, you could once again see that those signals are good, well, historically, and we know that history is not, you know, like mandatory to repeat itself.
To repeat, it rhymes.
Yeah, but this is a simple indication. The another aspect is just cumulative returns. So we think that assets that historically were performing good, well, maybe they will
continue or regress to the mean.
Yeah, but well, so here you can see our long-term investment signals. You can see that for the past 3 years, those assets were performing very good. Yeah, you can see assets here that made more than 100% return on capital.
Yeah, and I want to be in the red. I want to be in the red one, Andrew.
Yeah, who doesn't? I believe it's Amazon. I believe it's Amazon. Yeah, so, but you know, like, it's not about finding this one. It's about finding a combination of those guys that, well, even if one of them falls, you're good because you're diversifying. You have more of those good assets in your portfolio. Eventually, you will end up somewhere here, okay?
Right.
And this is another example. You can see that
you're happy with the middle. You're happy with the middle.
Yeah,
being
something
in the middle.
positive. Yeah, Yes,
So do you
something
think
positive.
people have a lot of unrealistic expectations about yearly returns? And are you like most hedge fund managers that are very happy and pleased and do cartwheels at 25% annum?
Sure, but we think that on each and every investment it is possible to make some returns. It's very important to actually take your stop loss and take profit levels very seriously, because, well, once again, this is about emotions and stuff, and sometimes we know, like, want to hold this stop loss longer. But if you actually stick to the rules and you won't allow more than 10% loss on each and every asset, the average, the mean of the returns is always possible.
Did you ever, have you ever put a CIC at the end of your stop loss order? I know I have. You know what it stands for? Cancel if close. Cancel if close. You know, people get it's close to their stop and they go, well, I'll give it a little more breathing room. So you don't, you have the discipline once you place a stop to keep it in there. How about once you start having returns? Does what you do trail a stop to lock in profits? Do you sell partial positions? How do you manage your positions?
Yeah, so usually we just divide it evenly for the capital we have. So suppose I have 50 trading signals and I have a 50K account, so I just will give each and every asset the 1,000. So it's very important not to give any asset more priority, because eventually and statistically, even if some of them fail, like go down to your stop loss, eventually you will be okay if the risk on each and every asset is the same. And sometimes if we have less cash, or you know, like sometimes you have assets that cost more than, say you decided to put 500 bucks on some asset, and, well, Amazon is way above, right? So in this scenario, we won't invest in it, because it breaks the rule of equal risk allocations for each and every asset.
Okay. Any leverage, like margin debt, or it's all cash?
Usually it's with margin, of course.
Okay. All right.
But sometimes we use our signals to just make some bull spreads and stuff like that. It depends. It depends on the option book and stuff, stuff like that.
I find it interesting. You look at the option book is a big part of your work. Okay, go ahead. I'm sorry.
Yeah. So another aspect of risk assessment, returns per day. So this is a plot of some trading ideas and trading assets and how they were performing daily. So we see that in this combination, sometimes it's very risky, because, well, it's the mean here is probably around 5%. So 5% movement a day, it's, well, we think it's risky, but it could be actually used. But if you take a look here, so it seems like the mean here is lower. So it's between 20% and 10, it's even lower than 5. So this is another aspect. And eventually, after the mean variance optimization and the efficient frontier, another aspect is just the cumulative returns and max drawdown. So we believe, once again, it's all about bad reputation. So we believe that if a company in the past 3 years lost more than 50%, well, for us, it's like we definitely won't trade it. Once again, this is not an indication. This is not an, you know, like, but once again, we think it's bad reputation. So if I'm looking for an let's say bullish signal, and for instance I have a company that EHTH, right? So for the past 3 years, and this is a bullish signal. So so this company lost more than
94.6%. Wow.
Yeah, so this is the max drawdown, and you know, like this,
Yeah.
this is this asset is for us.
That's like an option.
Yeah. So
You know what I say about options, right?
no.
Options are like relationships. 90% of them expire worthless. But that's kind of a cynical view. But
Yeah.
you've never heard that one before, huh? Okay.
No. So this is another aspect. But if we are looking on a company that, well, for the past 3 years had a drawdown then around 26%, and we can see that the cumulative returns are going okay, and the standard deviation is pretty low. So this is a simple evaluation of, you know, before even trying to locate this asset and see how it looks, I just know that this asset I'm gonna, well, definitely consider. And the one before, I'm like, well, another aspect is value at risk. I think, well, it was, it's been used by, well, most of the industry, but I think it's very simple and very easy way to actually assess risk for your investment. How actually, how much money can you lose on your single allocation for an asset? And we can see that, well, those assets are peaking here. So the potential here is 15% to lose on single investment. This is very high. On the other hand, those assets are bounded by 6-7%. This is okay. So another indication, those guys for me have a bad reputation. I'm not going to trade them. Same goes for this one, EHTH. Yeah, it's the one we have seen before. And this one, PNK. Okay, so assets that have CVAR and VAR of more than 7%, it's risky. And this is pretty. Another aspect we sometimes incorporate, but actually I have an error here, is just rolling alpha and beta. So another aspect is just to see how volatile are you, and, well, on average, how much money you are able to make with this combination of stocks or with these assets.
So are you, do you manage money? Are you a registered investment advisor, or?
No, we trade with our own money. We are not registered. Okay. We just provide the data. We provide ideas.
Okay, so your main business model is you're selling a subscription to your algo work.
Yeah. So we provide monthly subscriptions. We have for stocks, and we have for FX. In FX, we think it's more sophisticated and efficient to just subscribe to the trading signals via MetaTrader. For equities, it's just a monthly subscription, and you get each and every day and each and every week an email that looks like this, and you can see here the assets, you can see here the trading ideas, and, well, usually it's up to you to execute, of course. We are not, you know,
right. We're all captains of our own ship.
Yeah, but those are just trading ideas based on machine learning and some data analysis.
Okay, well, Andrew, it was a pleasure speaking to you today. I want to thank you for taking time out of your day and away from your assets to address us all. I think that it's something that people that are struggling with their the emotional aspects of their trading, you know, something automated may help them overcome something that, you know, maybe for years they've been trying to in using discretionary trading. So I really appreciate you coming here today. Thank you, Andrew. I made the pips rain down on you and your partner and your 100K account. Next year, I hope it's 2. And if people are interested, they could follow you at Al Ganel, and that's also the name of your website.
Yeah, it's the name of our website. We are very active on Twitter, stock tweets, Facebook, LinkedIn, and, well, thank you very much, Dale. Thank you.
You're very welcome, Andrew.
Thank you. Have a great day.
Good hunting, my friend. Adios.
Thank you. Adios,
Okay,
bye.
F.A.C.E. So that's it. Thank you, everyone, for hanging out with us, and I'll see you tomorrow. Remember, and I know a lot of people collected some pips today, but don't just count them, count your blessings, and with the rest, become a one-year subscriber at ForexAnalytix. As Steve said, you're very welcome. Hi, BW, how are you? That we cover a lot of instruments during our free webinar, but the markets aren't closed just because I'm signing off here. So many things can happen between when we end here and when we open tomorrow. So the best way to have the edge is to be informed by the best crew on the street, in my humble opinion. So adios, everyone. See you tomorrow. Enjoy your summer day.